Welcome everyone, and thank you for tuning in to hear my trading and market updates. This is Uncle Frank, and I'm not a financial advisor, nor is any of the content to be construed as financial advice. This channel is for entertainment purposes only. Please remember to hit the like button if you enjoyed the presentation, and be sure to subscribe to the channel so you're alerted when I have new information to share. So now let's get into the latest updates. Hey, welcome back everyone. I love doing the Monday pre-market show, especially for my AMC and XRP subscribers. My goal is to prepare for the week together by quickly scanning everything that can move the markets. I cover the narrative Wall Street wants you to know, and then I cover everything they don't discuss on CNBC, so you're ready for this shit show when it opens. Let's kick it off with exec sum. Investors are poising for an end-of-year stock market rally. Goldman and Morgan Stanley have divergent rate cut predictions. Biden and Xi are gearing up for a high-stakes meeting. Boeing is closing in on a major deal with the Emirates, and the Marvels disappointed at the box office. Here's the before the bell year-to-dates. S&P 500 up 15%. The Dow up 3.4% for the year. NASDAQ up 31.8%. Bitcoin 37,140, up 124.3% year to date. Ethereum stands at 2,049, up 71.3%. Gold 1942.70, up 6% for the year. Oil dropped to 77.35, down 1.3% for the year, and the 10-year Treasury stands at 4.620%. It's added 79 basis points for the year. Let's take a quick look back at last week from Wall Street Breakfast. Stocks rebounded strongly on Friday, recovering the ground lost in the previous session as Treasury yields stabilized. On Friday, the Dow closed up 1.15%, S&P 500 up 1.56%, and the NASDAQ up 2.05%. Friday's rally came a day after Fed Reserve Chair Jay Powell threw cold water on the market, saying higher interest rates might still be needed to tame inflation. But investors jumped back in, reclaiming the notion that the U.S. rates had peaked, which had sparked the rally in risky assets that extended through 8 straight sessions until Thursday. The tech-heavy index was buoyed by chip stocks amid a report that a Chinese artificial intelligence startup had bought enough of NVIDIA's chips before the U.S. export curbs kicked in. Friday's snapback was enough to lift 3 major market averages for a second consecutive week of gains, with the NASDAQ jumping 2.4% for the week, the S&P 500 advancing 1.3%, and the Dow Jones adding 0.7%. And here's the top 5 things to watch in markets in the week ahead from investing.com. In the coming week, U.S. inflation data will be closely watched, along with comments from several Fed Reserve officials, which will help investors shape their views on the future path of interest rates. Retailers are due to report earnings against a backdrop of persistent concerns over inflation and the economic outlook, and oil prices look set to remain volatile. Here's what you need to know to start your week. Number 1, U.S. inflation data. Investors are awaiting Tuesday's U.S. consumer price data for October for an update on the Fed's progress in its battle to keep lowering inflation from last year's multi-decade highs. Inflation is expected to have risen 0.1% on a monthly basis. September CPI rose 0.4% on a surprise surge in rental costs, but also showed a moderation in underlying inflation pressures. Here's the important part. A sharper cooling could fan the peak rate talk, fueled by October's employment report, which pointed to easing conditions in the labor market. The U.S. is also to release producer price data along with retail sales numbers for October, which are expected to dip into negative territory after a string of solid monthly gains. Other data due for release includes reports on industrial production, housing starts, and initial jobless claims. Number 2, Fed speakers. Investors will get a chance to hear from several Fed officials during the week, including New York Fed President John Williams, Chicago Fed President Austin Goolsbee, Governor Philip Jefferson, and Governor Michael Barr as policymakers weigh any further tightening ahead of their next meeting on December 12th and 13th. Number 3 is retail earnings. Third quarter earnings season is winding down, but several major retailers are due to report in the week ahead, with investors on the lookout for indications on how consumer spending is holding up. Home Depot is due to report ahead of the open on Tuesday, followed by Target ahead of Wednesday's market open, while results from Walmart and Macy's are due out on Thursday. Number 4, U.S. government shutdown risk. The risk of a federal government shutdown is looming if lawmakers in Washington are unable to pass a measure to at least temporarily fund operations before Friday. And finally, number 5, oil price volatility. Oil prices gained about 2% on Friday as Iraq voiced support for OPEC's oil cuts ahead of a meeting in 2 weeks, and as some speculators covered massive short positions ahead of weekend uncertainty. Still, prices settled with weekly losses of 4%, their third straight weekly decline. Concerns about the global demand outlook offset fears over potential production outages related to the Middle East conflict amid weak economic data out of China, the U.S., and the U.K. last week. Energy traders are looking ahead to a meeting between OPEC and allies, including Russia, on November 26th. Analysts think OPEC might cut supply further if prices continue to fall. Guys, I had to share these 3 updates from Crypto.com's Snapshot newsletter. Number 1, both Bitcoin and Ethereum have significantly outperformed gold this year, with Bitcoin up 93% and Ethereum up 39% against the metal. Bitcoin and Ethereum have also shown strong performance compared to traditional assets like equity and bonds. Number 2, according to a report published this week by digital asset investment firm CoinShares, crypto funds have recently seen their highest run of inflows since the 2021 bull market. Data shows investment funds with cryptocurrencies saw 261 million of net inflows last week, marking the 6th consecutive week of positive inflows, totaling 767 million during that period. And number 3, Bitcoin ETF ticker listed on DTCC website. The ticker for BTCO, which is Invesco and Galaxy's spot Bitcoin exchange traded fund, or ETF, has appeared on the Depository Trust and Clearing Corporation's website, also known as the DTCC, interpreted by some as a step forward in the application process. This follows the recent appearance of BlackRock's spot Bitcoin ETF on the same website. All I have to say to that is wait until the XRP ETF comes out. There is an outstanding article in Zero Hedge titled Shorts Running Scared for you technical guys. First slide, people are getting stopped in, so the shorts are getting stopped in. NASDAQ is pushing big levels as of this writing, a close above the 15,600 level, and things will get very dynamic. And apparently it's the same problem for the S&P 500. Taking out the trend, SPX is taking out the big trend line and is closing in on the 100-day moving average. Another massive up candle is creating even more frustration as the crowd is waiting to buy the dip. Also from the article, Tony P. on direction. Number 1, the U.S. 10-year note won't consistently produce significant rallies, and underperforming equity segments won't always see 13% weekly gains. Number 2, despite last week's challenges, current equity technicals are favorable. Number 3, the relationship between the economy and the Fed Reserve is currently stable, supporting certain market segments. And number 4, despite potential volatility, the expectation for the S&P is to gradually increase towards the year's end. Yummy name. Big jump in the NAAIM exposure index this week, up more than 30 points for only the 16th time in history. Stocks 1 month later, higher 14 of the 15 previous times. And under the title, Single Stock Short Selling, this chart depicts hedge fund U.S. single stock short flows increasing for a record 14 consecutive weeks, according to Goldman Sachs. And if this chart doesn't tell you something big is coming, nothing will. Titled Magnificent MM for money markets, the show must go on. Does this money ever start looking for alternatives? This chart depicts cumulative inflows to money market funds by year. Yeah, that's the red part. And if you're short AMC, I'm on your ass like a pit bull on a poodle. Bank of America is developing a big problem: commercial lending. We have written about the rising issue of commercial loans within the banking industry. B of A has been increasing its exposure to commercial loans. You need to do due diligence on the banks that house your hard-earned money to make sure it's safe. I've been telling you for a while, we are on the brink of a commercial real estate collapse in this country. Guys, this headline has been a long time coming. There is a new bank under scrutiny on Wall Street, Morgan Stanley. A big Wall Street bank is wrestling with investor concerns, a disappointing earnings result, and regulatory headaches. It's not just Goldman Sachs that fits this description, it's also Morgan Stanley. For much of this year, Goldman was the big Wall Street bank in the hot seat as it dealt with a costly retreat from consumer banking, a deal-making slump, job cuts, reports of partner unrest, and even questions about the future of CEO David Solomon. But now, crosstown, New York City rival Morgan Stanley is also under rising scrutiny as it prepares to hand over the corner office to Ted Pick, who will replace James Gorman as CEO on January 1st. The stock of Morgan Stanley is down 14% over the last 3 months and 8.5% over the last 6 months, more than any other big bank with a sizable Wall Street operation. Goldman, by comparison, is down roughly 4.5% for the last 3 months and up nearly 2% for the last 6. Morgan Stanley's largest single-day stock drop in more than 3 years, 7%, came in October, as it disclosed that investment banking and trading fell in the third quarter. All of Wall Street had been struggling with a prolonged deal-making downturn, but Morgan Stanley's 27% decline in investment banking revenue placed it last among the big banks. Regulatory issues are also beginning to pile up at the firm. One such headache is a years-long federal investigation into how it handled so-called block trades or private sales of stock. Semaphore, hey, that's the guy that exposed Adam Aaron. Semaphore reported that the firm could end up paying between $500 million and $1 billion to settle the block trading probes by the Justice Department and Securities and Exchange Commission, while also agreeing to improve internal controls. Morgan Stanley is also reportedly trying to address concerns from the Fed Reserve, its primary regulator, about foreign wealth management clients. The Fed wants to know whether Morgan Stanley has the proper controls to ensure those clients aren't laundering money, according to a report last week in the Wall Street Journal. The firm is trying to convince the Fed that any weaknesses have been rectified, according to the Journal. Now let's cover the geopolitical swans, starting with Iran. U.S. carries out another round of airstrikes on Iran-linked targets. From the New York Times, The Pentagon said on Saturday that there had been at least 48 attacks against U.S. forces in Syria and Iraq since October 17th, and that at least 56 U.S. service members had been injured. Roughly half of those suffered traumatic brain injuries, and 2 had to be flown to Landstuhl Military Hospital in Germany for treatment. The United States has 2,500 troops in Iraq and 900 in Syria, mostly to help local forces fight remnants of the Islamic State. The United States has been shifting military assets to the Middle East since Hamas' surprise attack against Israel on October 7th to try to prevent a regional war that could drag American forces into conflict with Iranian proxies in Lebanon, Yemen, Iraq, and Syria. And Iran warns of inevitable expansion of war after IDF conducts flag-raising ceremony in Gaza. And what about the war in Ukraine? Map shows another key Ukraine city almost fully encircled by 40,000 Russian troops. More evidence has emerged this week that Russia is poised to soon solidify over all the Donetsk region, in yet more bad news for Ukraine after its struggle to make any gains at all for the last 6 months. Newly published military maps show that Russian forces are in the midst of a larger pincer move involving some 40,000 troops closing in on the key city of Avdiivka, which has long been a Moscow objective since the war's start. Then another article from The Hill. Ukraine is waking up to reality. Ukraine won the war of 2022. That was the year of Ukraine's victory. Putin's troops had to withdraw from Kiev and Kherson, and they ran from Kharkiv. But the year 2023 has not been so good. And let's not forget China. Ray Dalio predicts World War III buys China. From the summary, Ray Dalio said that the odds of World War III went from 35% to 50% in 2 years. This fact may explain why Bridgewater Associates recently chose to bet heavily on emerging markets. Bridgewater's largest position is the iShares Emerging Markets ETF, which includes significant exposure to Chinese stocks. The valuation gap between U.S. and global stocks suggests that foreign stocks are likely to outperform U.S. stocks in the future. And then there's this headline. U.S. military talks with China are a priority at the Biden-Xi summit. The White House cited a resumption of U.S.-Chinese military communications as a priority ahead of this week's meeting between Presidents Joe Biden and Xi Jinping. The Chinese have basically severed those communication links, U.S. National Security Advisor Jake Sullivan said on CNN's State of the Union. President Biden would like to reestablish them, and he will look into this summit as an opportunity to try to advance the ball on that. But it's these headlines that have dominated the discussion and may have the biggest impact on Monday's open and the week to follow. From Reuters, Moody's turns negative on U.S. credit rating, draws Washington ire. And from Fox Business, U.S. credit rating outlook lowered to negative by Moody's as shutdown looms. From the New York Times, Moody's changes U.S. credit outlook to negative. And from CNN, Moody's sends a warning to America, your last AAA credit rating is at risk. Many subscribers were telling me this was going to flop, and they might be right. From Variety, box office, the Marvel misfires with $47 million. Lowest MCU opening weekend of all time. Then from Deadline, as we mentioned earlier, there's a maelstrom of reasons why the Marvels didn't work. Many will be quick to point to superhero fatigue, and that the great comic book movies of the millennium are now seeing their grand demise, just like the big Hollywood musicals of the 1960s. But people had a different opinion elsewhere. This article from The Direct may point to a different reason. The Marvel's director responds to woke sequel backlash. I'll leave it up to you to decide. And it wasn't all bad news this weekend at the box office. From Collider, Five Nights at Freddy's flies past mega milestone at the global box office. The Josh Hutcherson-led video game adaptation is now the highest-grossing horror movie of the year. Five Nights had crossed the $250 million milestone at the box office, making it a highly profitable success for Blumhouse and Universal. The movie adaptation, based on the popular video game, surpassed its production budget and has already beaten other horror offerings released this year. While a sequel hasn't been officially announced, the film's success suggests the potential for a new franchise, with plenty of material from the game series to adapt in the future. Hey, I want to thank you for watching, and please remember to hit the like button after this slide if you enjoyed the presentation. Subscribe to the channel and set the alert so you're notified when I have new information to share. See you at the bell.